Welcome to the FinTickAI Weekly Market Analysis for March 20th, 2026. The Nifty 50 closed at 23,114.50 and the Bank Nifty at 53,427.05. Remember to subscribe for your daily and weekly market edge. Want to stay ahead of the markets? Hit that subscribe button right now for your daily and weekly edge on Nifty, Bank Nifty, and in-depth sectoral analysis. Make sure you stick around until the very end, because we're breaking down the complete analysis and revealing the critical levels you absolutely need on your charts. You receive a bonus of the curated trade setups basis weekly calls. The Nifty 50 experienced a highly volatile week with a relief-driven rebound on Friday, despite being the fourth consecutive negative week. Critical support at the 23,000 psychological zone was tested, yet robust institutional buying in IT and metals provided buoyancy. Technical signals for Nifty 50 show a mixed picture. Bullish signs include a stochastic RSI crossover and institutional capital rotation. Bearish signals are driven by a severely bearish MACD, trading below key EMAs, and a surge in India VIX. The overall outlook remains neutral, suggesting potential consolidation. Nifty 50 key levels to watch include immediate resistance at 23,290 and immediate support at 22,900. The breakdown level is 22,735, and a recovery trigger is set at 23,577, which is mathematically required for a definitive trend shift. The Nifty 50 probability outlook has a sideways to bearish bias with a moderate confidence level. Historic FII outflows, geopolitical escalations, and a hawkish Fed outweigh localized domestic institutional buying, suggesting potential downside. Bank Nifty showed profound structural underperformance, closing marginally negative. The abrupt resignation of HDFC Bank's chairman triggered a violent valuation contraction. Aggressive institutional supply was repeatedly met near 54,380. A volume-backed reclamation of 54,800 is needed to exit the high volatility vacuum. Bank Nifty technical signals are predominantly bearish. Key bearish indicators include a deeply negative MACD and an elevated ADX confirming a downtrend. Bullish signs are limited to isolated PSU banking outperformance and a bullish hammer candlestick pattern on Friday. Bank Nifty's key levels show immediate resistance at 53,700 and immediate support at 53,250. The breakdown level is 51,694, indicating catastrophic structural failure below this. The recovery trigger is at 54,968, which is necessary to shift the medium-term trend back to bullish. The Bank Nifty probability outlook shows a bearish bias with a high confidence level. Systemic shock to corporate governance in HDFC Bank and surging Brent Crude heavily outweigh localized PSU strength, with a 45% probability of a bearish movement. In top gainers, we see capital aggressively moving from overleveraged sectors into defensive equities. Electra Greentech, Jaiprakash Power, and Waaree Energies led the pack with significant price and volume breakouts. Top losers reflect capital flight from rate-sensitive and macro-vulnerable companies. IDBI Bank Limited experienced a heavy sell-off, down over 20%. Other significant losers include Ramkrishna Forgings and major players in the oil and gas and banking sectors. Stocks near their 52-week high show institutional capital migrating toward defensive sectors like pharmaceuticals and niche chemicals. Ether Industries and Tata Power demonstrated robust institutional accumulation and strong structural breakouts. Conversely, stocks near their 52-week low are experiencing systemic sectoral rotation, punishing high beta and structurally compromised stocks. Bajaj Finance and HDFC Bank showed severe structural degradation and valuation contraction, respectively. Our first trending stock, JSW Steel, is strongly bullish. It is experiencing a counter-trend rally, absorbing overhead supply with a massive bullish Marubozu candle. Strong institutional support and a 20-day EMA bullish crossover above the 50-day EMA confirm the momentum. Trending stock number 2, Tech Mahindra, is bullish. The price action shows a classic ascending triangle breakout. This validates a massive sector rotation into defensive IT assets, with accumulation volumes 2.5 times the 20-day average. Trending stock number 3 is Tata Power, which is bullish. The stock conquered its 52-week high, closing at 402.60, and formed a formidable higher-low sequence. Relentless buying absorbed early short sellers, forcing short covering rallies. Trending stock number 4 is HDFC Bank, which is severely bearish. The stock experienced a catastrophic valuation compression, plummeting 9% intraday following an abrupt chairman resignation, breaking multiple macro support tiers. Trending stock number 5 is FinTickAI, which is bullish. It rallied 3% on fundamental news regarding an ADB-funded international order. The stock utilized the 50-day moving average as a springboard out of a multi-week consolidation phase. Our first trade setup is Suzlon Energy. This is highlighted as a top high upside pick. The entry price is 40.00, stop loss is 36.00, and the target is 48.00, resulting in a risk-reward ratio of 1:2. Trade setup 2 is Adani Green. Identified as a core asset with high potential upside, the entry price is 1,800.00, stop loss is 1,720.00, and the target is 1,960.00. This setup also provides a 1:2 risk-reward ratio. Trade setup 3 is IRCTC. The stock demonstrates high velocity potential. The entry price is 1,020.00. Stop loss is 990.00, and the target is 1,080.00, with a risk-reward ratio of 1:2. Trade setup 4 is Tech Mahindra. This setup targets an immediate liquidity zone capture. The entry price is 1,350.00, stop loss is 1,300.00, and the target is 1,450.00, maintaining a 1:2 risk-reward ratio. Trade setup 5 is HDFC Life. This setup is a high-conviction momentum pick. The entry price is 590.00, stop loss is 575.00, and the target is 620.00, with a 1:2 risk-reward ratio. Trade setup 6 is SBI. The stock displays mean reversion dynamics. The entry price is 745.00, stop loss is 730.00, and the target is 775.00, giving a 1:2 risk-reward ratio. This week's macro multiplier focuses on the synchronized tightening of global monetary policy, crushing easing hopes and pressuring FIIs to de-risk portfolios. This macro overhang created an environment of systemic liquidity suction. The governance crisis multiplier is critical, driven by institutional panic and HDFC Bank's chairman resignation. The subsequent sell-off created a sector-wide contagion effect, increasing systemic risk perception across the entire private banking sector. Thank you for watching the FinTickAI Weekly Market Analysis. Don't forget to like and subscribe for more in-depth market videos and analysis.